Welcome back. It's now time for Power Talk. And tonight we're talking about Safaricom PLC. Recently released their annual results, making a profit of 52.48 billion shillings. But beyond all of those big numbers, what do they mean for you, the Safaricom customer? And so Safaricom CEO Peter Ndegwa joins me on Power Talk tonight. Thank you very much, Peter. It's good to have you here once again.
Nice to see you, Yvonne.
Let's talk about, let's start there with your annual results. Your profits at 52.48, impressive, but it is also a reduction from around 67, almost 68 billion shillings the previous year. And Peter, for many people who viewed Safaricom as one of the biggest profit-making companies, this is the third consecutive profit fall. Tell us about what's going on.
So Yvonne, we are very pleased with the results that we have announced. I know that the profit is the headline, but actually when you look at the business, we are very pleased. It's a very solid result in a tough environment. The business is very resilient. We actually crossed the 300 billion turnover mark. So, of course, it's the first company in Kenya and in the region to cross that number. We grew 5% to 310 billion. So the profit story needs to be told in the context of a growth in a tough year. If you look at the growth of 5%, that's 15 billion added to our turnover. That's the size of a medium-sized business, in fact, a large business. But also, when you look at and underline that, the growth has actually been broad-based, other than voice, which is a mature business. M-Pesa grew 9% because we gave more value to our customers. We grew data, double-digit mobile data at 10.5%. We grew fiber, which is the home business, by 20%. And our enterprise business continues to grow as we drive ICT and IoT. But just coming to profit, we need to now start looking at Safaricom and the shape of Safaricom in two businesses. The Kenya business is very strong, actually delivered 74 billion Kenya shillings in profit after tax. And then the Ethiopia business, which we can talk about separately. Ethiopia, we went into Ethiopia 2 years ago, and we can speak about it. But speaking about Kenya, so Kenya grew 5%, and bottom line also grew. So both top and bottom line in terms of growth.
I want to understand the tough economic environment that you speak of, that Safaricom had to go through. What were some of those factors?
So, of course, the global crisis affected supply chain. So we saw cost increasing, energy costs in particular increase, not just because of local issues such as the subsidies being removed, but also fuel prices increase. Energy is one of our biggest costs on the network side. The currency depreciating a bit also added to that. Of course, the inflation in the country affected consumer disposable income, so we saw pressure. Then, of course, we saw a slowdown leading up to the elections, even after election. Although H2, in the second half of the year, we saw a recovery as customers started to come back. So the impact of higher cost affected both customers in terms of inflation, and we had to reduce prices, and I'll talk about that. And then, of course, affected our P&L, and that's why the profit has not grown as fast. But actually, the decline in profit is because of the startup costs in Ethiopia.
Yeah, and that's actually the thing I wanted to talk about now with the investment in Ethiopia. So we know, you got the mobile money trading license last week, but it would seem like, Safaricom, at least the Kenya business, is the one making the heavier investments there. So talk to us about that and the investments vis-a-vis all the partners and shareholders in Safaricom.
So we are very pleased that we now have the mobile financial services license, which we got last year, and actually we announced on the day we announced results. The consortium which we are leading, we invested 55%. We are 55% shareholder. We have Sumitomo and BII having the balance with the Vodacom, a small proportion. So we're always going to lead. We want, because we are the majority shareholder. Ethiopia is going to be a big driver of medium to long-term growth for Safaricom. We knew that voice in Kenya was always going to decline. Although the other businesses are growing very, very well, we need a new business, especially a geography like Ethiopia, where second largest country, 120 million people, and now with a mobile money license. So of course we knew and we expected that in the first 3 to 4 years, we would have startup costs. We have made significant progress. We built 1,300 sites in the first year, the first 7 months. We are building another 1,700. So we will have 3,000 sites by the end of this financial year. That's about half, to put it in context, about half of what we have in Kenya. So it's a very accelerated build. And although we are saying that Safaricom is investing, yes, of course, there will be a bit of investment to begin with, but when the results start to come through in 3 to 4 years, it will drive double-digit growth for the group, both top and bottom line. Okay. And we expect that business to be breaking even in year 4.
Okay. We've heard about, what it is for Safaricom. I want us to now focus on the shareholders and the consumers for a moment. On the day you announced your results last week, your share price dipped. In fact, the previous day, on Tuesday, I believe, each share of Safaricom was trading at 15 shillings and 30 cents. On the day you announced your results, it was down to 14 shillings and 80 cents. And if you look at the trend of the share prices for Safaricom, there's been a downward spiral over the last 2 months, close to 45%, and hundreds of millions of shillings, of value wiped out. So what is the value for the shareholders who, actively participated in the IPO, but have seen the share price slide down over the course of 2 years?
Yeah, you're right. Of course, the shares go up and down. And when we announced our results, the share moderated a bit, has actually gone back to where it was when we announced our results. Yesterday, actually, it was 15.5. So we don't worry about the small differences, but you're right. There has been a downward trend on our share. On the Nairobi Stock Exchange, almost 50% in the past year or so. But it's actually, when you look at it, it is actually the whole exchange has actually been dropping. Most of the shares on the stock exchange have been impacted. When you look at the fundamentals of our business, analysts who actually follow Safaricom value the share at between 20 and 39 shillings. So an average of about 28 to 30 shillings. So it means that our share is trading at a 50% discount, which shows that actually the driver of the shares on the stock exchange are beyond the fundamentals of the business. Because as I've said, the Kenya business is solid, delivered strong growth and strong bottom line growth. Ethiopia was always going to have startup losses, but those would then be recovered through momentum from year 4. Let me now speak about why I think what has been driving this. You saw that the increase in bond rates. So some of the investors are going to bonds. Interest rates in the US have actually gone up. Flight to quality. So a lot of the share sale has actually come from foreign investors. We used to have about 50-50, or the floating 25% of Safaricom that's on the stock exchange between foreign and local. Now it's about 2/3 local and 1/3 foreign, which means most of the withdrawal has been from the foreign investors.
But Peter, for the smaller shareholders, you're paying a dividend of 62 cents per share. Cumulatively, when you announce that, it's billions of shillings, but there are many ordinary Kenyans who've bought fewer shares, and 62 shillings per share isn't something that, 62 cents per share isn't something that they feel, is value for what they have put in. So what would you say to those smaller shareholders who are now looking at the dividend and saying, this is not what they expected?
So Safaricom has always been known for 2 things. One is as a growth stock, so because we've always grown. And the reason why we're investing in Ethiopia, the reason why we are really powering some of our new businesses is because we want Safaricom to continue to grow. The second is we pay 80% of our distributable profits to shareholders as dividends. We've paid more than 500 billion in dividends since the beginning. In the past 3 years, we've paid 150 billion.
But for I
know for the smaller shareholder, the thing
it doesn't translate.
The thing that I'll say to the smaller shareholder is that actually the dividend yield, which is your dividend to the share price, is close to 10%. That is actually much better return than most of other investment. The second, we believe, as management, but also the board believes, that we are making the right decisions long term. And actually the decline in the profits of Safaricom is purely because of the startup losses in Ethiopia. A new business has to invest for us to be able to accelerate the growth of these shares in the future. If we didn't invest in M-Pesa 16 years ago, we will not be the business we are in. 5 years from now, many people will credit us and say we made the best decision in terms of investing. Of course, there's some near-term slight movement or slight decline in the dividends itself. But I believe the share will correct as soon as the macro issues correct, because the macro issues can't go on forever.
Okay.
So I feel that it is important that people put it in context.
Yeah.
Dividends will always be part of the return, but also the long-term return will come from a share appreciation in future.
Put this in context for your customers. Year on year, Safaricom announces big numbers, huge profits. But your customers, your consumers who contribute to giving you those big profits still struggle with the cost of your products, Peter. You still hear Safaricom Wanakula bundles. Yeah. You know, you hear that, you know, the cost of M-Pesa transactions is rather high. And so for some, it would feel like Safaricom is making mega profits, but are exploiting the customers who actually enable them to do that. Peter, what do you say to those that say, look, Safaricom is just becoming an expensive network for all of their products across the board?
I was actually smiling because you were just telling me that our profit has declined when we are investing into the future. But let me talk about customers, because actually we have to balance the returns to various stakeholders. The society which we serve through our foundations, customers which we serve through innovation and actually pricing, but also shareholders. So let me talk about customers. One of the things that I didn't say when I talked about growth of 5%, we grew customer numbers and we grew usage by a significant amount. And the reason why we did that is because we have been reducing pricing. If you look at data price, we have reduced data price since 2020 by 70%, from about 22.6 cents, Kenya cents per MB, to about 6.7. So
but sometimes the quality is also something to speak about beyond the cost.
We have actually significantly improved the quality of our network. We have 4G everywhere now. 3-4 years ago, we have 4G at 50% of the places. Now we have all our sites have 4G, which is very, very important. We have accelerated purchase of 4G phones, because the actual experience also depends on the handset you have through Lipa Mdogo Mdogo. So we have really improved experience. So the experience have really improved. In fact, the feedback that we get has been very good. When you look at the M-Pesa side, when we went back to charging on wallet to bank to wallet, we've reduced the charges by 50%. On the pay bills, we've reduced by 50%. And today, 40% of our transactions, especially what we call Kadogo, are free. Below 100, for, say, like bus fares and so on, and also below 200 on all buy goods. On the voice side, we've reduced by 40%. So our prices are actually lower now than they were 2-3 years ago. So although we are delivering revenue, we are actually seeing significant increase on usage. So on mobile data, we saw a 40% increase in usage of mobile data. So the growth of 10% in revenue was because of 40% increase in usage and a reduction in price of data.
Peter, I'm really out of time, so this last one, I'm sorry, I'm going to have to rush you through it a little bit, but it's no less important. And this is Fuliza, and perhaps the impact that the Hustler Fund has had on Fuliza. So last year in October, you announced a 50% reduction in the cost of Fuliza. In fact, the president was there at that announcement. And you have heard the political class saying Fuliza is expensive, and that is why the Hustler Fund has been brought in to counter that. Again, it still goes to the cost of your products. How has the Hustler Fund impacted Fuliza as a product for Safaricom?
So Fuliza, we have of course seen a decline in value in terms of revenue, but we've seen an increase in usage of Fuliza because it's 50% cheaper. The first 3 days are free, so which is very important. And as I said at the time when we announced, that is very good for us long term because it's more affordable. On Hustler Fund, we've seen a significant success, more than 24 billion borrowed by 15 million million customers, and 6 to 7 million are borrowing on a regular basis. And as a result, we've actually seen 2 million people who are not actually interacting with M-Pesa coming back into M-Pesa and actually borrowing. So accessible credit is a very important way of delivering more value to our customers. So you asked me about value. We have actually given more value on the Fuliza side. And actually the fact that Hustler Fund has been successful shows there's still a very big opportunity and the need has still not been satisfied for affordable credit.
Indeed. Thank you so much for making time for us here on Power Talk tonight. Always a pleasure hosting you. Thank you. Peter Ndegwa, CEO Safaricom, on Power Talk.